Imagine a company that doesn't need employees, doesn't sleep, and doesn't make mistakes. A company that runs entirely on artificial intelligence, making products, handling customers, even improving itself without human input. Sounds like science fiction, right? Well, it's already happening. Right now, investors from Silicon Valley to Wall Street are quietly pouring billions of dollars into what they're calling autonomous companies. And these AI-powered businesses might just redefine capitalism itself. In the early days of automation, we replaced physical labor with machines. Then came the internet, which digitized communication and commerce. Now we're entering a third revolution, one where AI replaces management and decision-making entirely. These autonomous companies aren't startups run by small teams. They're self-operating digital organisms. They can launch, grow, and even scale globally, with minimal or no human oversight. And the world's smartest investors are noticing. Because these companies aren't just efficient, they're infinitely scalable and nearly impossible to compete with. So in this video, we're diving deep into why investors are betting billions on autonomous companies, how they work, and what this means for the future of business. 1. The rise of the autonomous company. An autonomous company is one that can make decisions, execute tasks, and optimize itself through AI without constant human management. Think of it like this. Instead of having employees managing marketing, accounting, and customer service, an autonomous company runs all of that through interconnected AI systems. For example, imagine a digital clothing brand that uses AI to design fashion trends based on global data, AI to handle marketing campaigns automatically, AI chatbots to manage customer service, and AI accounting software that tracks revenue in real time. That's not a fantasy. Companies like Cognizant, Synthesia, and AutoGPT-driven startups are already experimenting with full AI-managed workflows. This is the foundation of the next trillion-dollar wave, and investors are racing to get in early. 2. The investors leading the charge. In 2024, venture capital firms like Andreessen Horowitz, Sequoia Capital, and SoftBank quietly shifted major parts of their portfolios toward AI automation startups. They're not just betting on AI tools anymore, they're betting on AI-run businesses. Companies like Figure AI, which builds humanoid robots for labor automation, and Character.ai, which creates AI personalities that act as digital employees, have already raised hundreds of millions. But the real excitement is around autonomous startups. Ventures built entirely on AI stacks like AutoGPT, LangChain, and reinforcement learning agents. Investors see these businesses as machines that make money, systems that never burn out, demand salaries, or call in sick. 3. The profit model. Infinite scalability. Here's why investors love autonomous companies. Scalability without limits. Traditional startups grow linearly. More customers require more employees, more infrastructure, and more management. But autonomous companies grow exponentially. Once an AI system is trained, it can replicate itself endlessly. You can duplicate a customer support AI a million times, and your costs barely increase. This is what VCS call zero marginal cost scaling. It's the same model that made companies like Google, Meta, and Netflix so profitable. But now AI is removing the need for human input entirely. In other words, you can scale revenue without scaling people. 4. The rise of the self-running startup. The idea of an AI startup that manages itself isn't just theoretical. There are already experimental projects known as AIDAOS, decentralized autonomous organizations, where AIS manage funds, make business decisions, and even distribute profits to token holders. Some tech pioneers are calling them autonomous agents of capitalism. One example is autonomous agents by Fetch.ai, where digital entities negotiate deals, purchase data, and make financial decisions, all automatically. Imagine an Uber run entirely by AI, drivers replaced by self-driving cars, customer support handled by chatbots, route optimization managed by algorithms, and pricing adjusted automatically. That's not far off, and investors know it. 5. The economic incentive: cutting human costs. Labor is expensive. Training, salaries, insurance, and management, they all add up. But with AI, investors can now back companies that don't need traditional employees. And that changes everything. According to a recent report by McKinsey, AI could reduce business operational costs by up to 70% over the next decade. That means more profit, faster growth, and higher investor returns. In short, AI doesn't just optimize productivity, it eliminates overhead. And that's irresistible to investors chasing massive returns. 6. The ethical and economic dilemma. But there's a dark side to this revolution. If companies no longer need human workers, what happens to jobs? What happens to creativity, culture, and the idea of human-led innovation? Some economists warn that this could lead to a new kind of economy, one dominated by AI systems, where humans are simply consumers rather than creators. Others argue it's just evolution. Every major industrial shift displaces old jobs but creates new ones. The difference this time is speed. AI evolves faster than humans can adapt. So while investors celebrate efficiency, society may soon face its biggest labor crisis in history. 7. The future human-AI partnerships. But it's not all doom and gloom. Many experts believe the future won't be about AI replacing humans. It'll be about AI partnering with humans. The most powerful companies of tomorrow will likely blend the best of both worlds: human intuition, ethics, and creativity, combined with AI's speed, precision, and scalability. Investors aren't just betting on machines. They're betting on a new kind of capitalism where human founders create digital organizations that think and act independently. As one venture capitalist put it, autonomous companies aren't the end of entrepreneurship, they're the evolution of it. We're standing at the edge of a new business era, one where companies run themselves and investors back algorithms instead of CEOs. The question isn't whether autonomous companies will dominate, it's how fast they'll take over and who will control them. Because the entrepreneurs and investors who understand this shift early won't just build successful businesses, they'll own the future of capitalism itself. So the next time you hear about a startup raising hundreds of millions, ask yourself, who's really running it? A team of humans or a network of intelligent machines?